Hello, everyone. Welcome. Thanks for taking time out of your Saturday morning, and welcome to this specialist trading educational presentation. Now, this morning, I'd like to talk to you about secrets of finely tuned entry points. And this is going to be part one in a two-part series. Next week, I will continue and go on to more advanced techniques for entry. But today, I want to talk to you about some elementary ways of increasing your odds for consistency by applying these two secrets. You see, oftentimes, when you have an unsuccessful trade, it's not so much that your plan or your strategy is out of sync and that it picked the wrong stock or the wrong direction or the wrong currency pair or future. What really happened is that your entry point was faulty, and that's why you actually lost money. For example, let's look at this older chart here in Apple. Now, someone looking at this would say, well, it's in a downtrend. But you know what? It's come to some support, or my strategy says I should buy if it starts to go back up. And then all of a sudden, it does start to go back up. So you're convinced that that was just a pullback. It was just a small little sell-off, and it's ready to make new highs. So what you do is you get excited and you jump in and buy, right? This is the way most traders trade. And then look what happens. All right. At this point, you probably are either saying this is ridiculous, I better sell because I'm losing too much money, or I don't want to lose any more, or you've already been stopped out with a stop order. So you just rack it up to a loss. And you say, well, I guess my strategy was wrong. I guess I picked the wrong stock. I had bad, faulty information. Well, it's not so much actually that you had bad information. It was just that your entry point was faulty. It was wrong. So in this educational presentation today, I'm going to share with you two secrets. And one of them would not have bought here at all. Even though it was the right thing to go long Apple, it would have waited to buy until this bar right here. And that would have been your signal to buy. And as you see, after all, you were correct. The stock was about to make new highs. It's just that you got in a little bit too early. So I'm going to share with you a couple of secrets today that can help alleviate these problems a lot of the times. And you'll see how simple it is to apply these secrets on our platform, the PTS Primo charting platform. This is the educational platform that actually teaches you the secrets of finely tuned entry points. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. About 15 years ago, I teamed up with Pro Trader Strategies. We've just had one goal in mind, and that was simply to educate traders around the world. And I'm happy to say now that we have students in over 115 countries and in virtually every state in the United States. So I'm really happy to report that. And we have testimonials online and on our websites of traders who have become consistent for the very first time in their life. So we're happy to do that because first and foremost, we are simply educators. That's all we're trying to do is educate traders so that ultimately you can make your own trading decisions. I know a lot of people say, well, why go to all that trouble, Steve? Why not just post what you buy or sell or what your strategies are signaling, and we'll just piggyback and do whatever they say or tell us to do. Well, if you think of it, the entire industry is based on that premise of you simply giving away your power and following what some so-called trading guru is doing, or going to some chat room and seeing what everyone is buying or selling or what everyone likes, or listening to the people after the market closes on TV to see what they think the market's going to do, or even looking at the earnings or the jobless claims or financial reports. All right. Most of the time you make your decisions not based off what you think or what you've learned, but based off what someone or something is telling you. And if this works so well, why is it estimated that 80 to 85% of all traders fail? And when we say fail, we don't mean that you're going to have a series of losses. We ultimately mean you're going to give all your money away that you've saved for trading. It's because this simply doesn't work. It's because you should never follow what someone else is buying or selling, even if they're successful. It doesn't matter. Most likely you'll still lose money. The reason is everyone has their own risk parameters. Everyone can sleep at night with different parameters. Someone could take a $10,000 loss and sleep like a baby. Someone else with a $100 loss wouldn't be able to sleep at night. So everyone comes in with different baggage. That's why you should be able to trade based off your own parameters and off your own feelings. And that's what we do as our goal here. We provide you with things that have stood the test of time, that are very consistent, so that ultimately you can make your own trading decisions. That's what it's all about. You should never follow what someone else does. Take it from me, trust me. I've learned that on my own. When I first started trading 44 years ago, I tried the same things that many of you probably do yourselves, and it didn't work. It didn't work at all. So it's not about to work now, and it didn't work then. So that's basically what we really want to instill in all of you. Now, before we begin, as always, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results with these 2 entry points, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are an educational company, all examples are strictly for educational purposes only. Now, a lot of people that attend my webinars or are students of mine say, Steve, can I get education on a daily basis? Well, sure you can. If you follow us on Twitter, I post different little bits of information, little bits of financial wisdom on a daily basis. There's our handle right there. You may want to copy that down. Anywhere from financial wisdom to signals our strategies have generated. But remember, these are not meant as signposts for you to take these signals. They're meant to educate you so that you can learn how to trade on your own. So lots of great free education on a daily basis. Please feel free to follow us on Twitter. So remember, as I stated in the opening statements, we are first and foremost an educational company. This means if you're come here today thinking that I'm going to tell you what I think the market's going to do, if it's going to top out, if it's going to keep going up, or if I tell you what the best stock is to buy, what my opinion is of the perfect time frame, you've really come to the wrong place. That goes entirely against our philosophy as educators. Remember, our goal is to teach you how to trade with the specialist edge. A good mentor does not trade for you. All right. Imagine you wanted to learn any skill, any hobby, any endeavor. Okay. And you hired a coach or someone to train you. Let's say you wanted to learn how to swim. Right. Someone could go in the pool and teach you different things and ultimately share with you the experience of swimming and show you exactly how to do it. But when you want to go out in the ocean or go out into a pool, that trainer, that coach is not going to swim for you. You've got to do it on your own. It's the same way with trading. All right. A trader or the mentor is not going to trade for you. He's not going to, tell you what to buy or what to sell. You've got to do that on your own. It's no different in any endeavor. It's no different with trading. So as you can see here, my goal is not to force feed you signals or tell you what the perfect time frame is or tell you what market to trade. My goal is simply to teach you how to trade with the specialist edge. This is the same edge that sustained me now going on 44 years of trading. Hopefully I'll be able to do the same for you. Now, this is an educational presentation. I'm going to share with you a lot of different insights, things I've accumulated in my 44 years. But please, if you have questions, let's wait till the very end of the class today. I have a lot of slides to share with you, and many times your question is answered in the very next slide. The only question I will answer, is this being recorded? Yes, it is. We record all of our webinars, so if you have technical issues or if you're having difficulty seeing or hearing me clearly, don't worry, you'll all get a link to this recording. Now, the only other thing I'd like to say is since we just moved on to another different platform now for presenting our webinars, we're still a little bit new to this ourselves. I want to make sure that everyone is seeing and hearing me clearly before I start the class. So if you would just indulge me in a minute and go to your chat box. I believe that's in the little drop-down menu there, and just type in a yes or a no. If you can see or hear everything clearly, see the screen or hear my voice, then just type in yes. If you can't, just type in no. But I just want to make sure because we had some difficulty the last time and I wanted to make sure, but everything seems very good. Yes, so far everything's good. Oh, great. I've done this before in the past. Believe it or not, a couple of times, not with this platform, but with the other ones, I've spoken for a good half hour before I realized that no one was seeing or hearing me at all. So I don't want to do that and have to start all over again. So let's see, we got 1, 2, 3, 4, 5. Yes, it seems like everyone is being able to see and hear everything clearly. Great. And remember, if we do have technical issues, oftentimes it could be your own internet connection. So you just log off and then log back on again, and that can often help. Okay, so don't worry though, this is being recorded once again. So if we do run into a little roadblock here, everyone will get a link to this recording. Okay, with that stated, let us begin today's educational presentation. And I like to start my presentations with a theme. And here's the theme of today's Saturday class. Basically, individual price bars are always telling you what they want to do next. I mean, think of that. Remember we said how most traders take themselves out of the game by listening to some guy on TV or some guy in a trading room or a chat room or reading some blog. But the funny thing is that the price bars in front of you, the very things that you're watching, are always telling you what they want to do. So why are we listening to these outside sources? Why don't we just listen to them? So our only job as a trader is to identify these price bars and then apply them to our strategy. Okay, it's that simple. See, that's what we call listening to the market, as opposed to listening to some guy on TV or listening to the earnings or listening to a jobless report. Let's just listen to the chart in front of us. It's a lot simpler and it's not so subjective, meaning that, you know, how many times have you seen that, oh boy, that's terrible news, we're going to inflation, right? And the market makes new highs. Or how about you've seen tremendous news, wow, this stock beat its earnings and it just falls out of bed, right? I mean, many of these things have just happened in the last few days. So they're too subjective. We want things that are cut and dry, and this is what I'm going to share with you today. All right, secret number one. This is called our top bottom 25% bar. All right, I know a lot of you who are students of mine, I see here in class, know what this is already, but let's just explain to the people who are new to this. These are bars that close either in the top or bottom quarter of their range. So it actually makes no difference what time frame, it makes no difference what market. In fact, we specifically deleted what market this was and what time frame because we want you to know that this is a generic bar. It could be currency pairs, it could be a monthly chart of Apple, it could be a 5-minute chart of the futures, it could be a weekly chart of Bitcoin. It makes no difference. But what you want to do with any bar is divide it by 4 separate but equal parameters here. And if you close in that top 25%, what is the market? Not some guy on TV, not some guy in a chat room. What is the market right in front of you? What is the source telling you? The market is saying it wants to go higher. Okay, it's that simple. Now, the same thing happens to the reverse. If we see a bar here and we divide it by 4 separate but equal parts, if we close in that bottom 25%, what is the market telling you? It's telling you it wants to go lower. It's that simple, okay? So the top bottom 25% bars should be applied as the setup bar for whatever strategy you're trading. In other words, this is just one technique, meaning that, let's say your strategy says to buy, okay? Well, you will have a higher level of consistency if you wait for the bar that closes in the top quarter of its range. So let's say you have a buy signal, but the bar closes in the bottom portion. You're going to have a lower level of consistency of that trade working out if you buy it right there off the market. Wait for the bar that closes in the top 25%. You'll have a higher level of consistency. For example, remember this example in Apple where we said we wanted to buy this? Well, look at where we closed. We closed just about in the middle. We're not in the top 25%. And then look what happened. Okay, that's because the market wasn't giving us clear signs that it wanted to go higher. But if we waited for this bar, provided we still think Apple is a buy, well, then that's the one we should be getting in on, right? It closed in the top 25%. Yeah, that's our buy setup. And it's off to the races. See how simple that is? We didn't have to go read some guy on a blog what he thinks of the stock, or we didn't have to go to some chat room. We just knew from looking at the price bar. The price bar tells you just about everything you need to know. How about this example? Let's say you're looking at this older chart in Tiffany, okay? It's been going down and okay, you say, well, it's not very good. I don't like the fundamentals. My strategy doesn't like this. And then it has a run, but you don't believe in this. You think it's a short. So you say to yourself, well, I'm going to sell. And should you be selling? No, because look at the bars. There are no bars that close in the bottom 25%. So the market is telling you it really doesn't want to go down right now. And obviously, look what happened. This is why most traders lose money, because you're listening to some guy in a chat room or listening to some report you read that you should sell or buy this stock, and your entry is faulty. Maybe the idea is not faulty at all. It's just the entry point. So what we want to do is wait for a bar that closes in the bottom portion of its range. So far, these are closed towards the high or the middle. But what do we have here? This is our signal. Since we close in the bottom 25%, now, provided we still think we should sell Tiffany, this is our setup bar. So we sell, and look what happens. All right, you see how simple that is? These are the secrets that floor traders know, that I learned trading on the floor of the stock exchange. Do they work 100% of the time? No. And do they work all the time? No. Sometimes you'll get a great buy or a great sell where it isn't in the top or bottom 25%. But remember, we're trying to increase your odds for consistency. We're not telling you that this is what you must do all the time. Remember, that's what most webinars and most so-called educators do. We're just giving you information that has high levels of consistency. Let's go on to secret number two, okay? Secret number two is another great method that you can also apply in conjunction with what we've been sharing with you in secret number one, okay? Secret number two is the confirmation method. Now, please remember, this is a method. Most students of mine, when they first learn about confirmation, say, hey, gosh, this is great. This is a great way to trade. I'm going to apply this and use it as a strategy. It's not a strategy. A method is something that you can alter and edit to meet your needs. And that's what the confirmation method is. So let me explain to you exactly what this is in this definition. Confirmation is the verification that the trend has resumed in your desired direction. So this is your signal to enter the trade. Specialist always waits for his trade to be confirmed before entry. All right. Now that I've thoroughly confused you and you have no idea what this means, let's look at these rules here. Let's say you have a buy signal, okay? After an entry signal has been given, you don't simply want to buy at the market or buy with a limit. You're only going to buy once price trades 1 to 2 ticks above the original signal bar. Now, if entry does not take place on the next bar or the second bar, you may continue this process with each preceding bar. But this is only as long as the setup is still valid within the strategy. Or you continue this until your order is filled or canceled. So let me show you what I mean here. Let's say you like this stock, but rather than just buying at the market, what you want to do is use confirmation. All right, so what you want to do is, instead of just buying right here, you say, I'll buy if we trade above. And you continue this process. You see here, if you had bought at the market, look at, you would have lost. But you haven't bought yet. You're using the confirmation method, so you continue to track it all the way down as it goes lower until you get filled or you feel it's no longer a valid signal and you just say, you know what, I'm pulling the plug. I'm not going to buy this after all. But let's say you still like this stock. Well, right here, you would have actually bought it. That's your entry point because that's a buy confirmation. And look what happened. You see, once again, had you just bought right here where you wanted to, you would have had to sit through 2 or 3 days of downward movement. And even though it was right to buy the stock, that 2 or 3 days of the sell-off is usually what most traders can't deal with, right? You sit there and you go, gosh, I can't take any more losses. This is really, what if this goes down even more? And that's usually where you sell or take a loss. And then right then, that's where the stock starts to go up. But if you had applied the confirmation method, you would have only entered once price traded above. Now, remember, we say this is a method because you can alter this. Now, some of our strategies apply the confirmation method, but only for one bar. And if it doesn't trade on the next bar, then we're completely over with the setup. It doesn't count anymore. Whereas other methods, we continue to track it all the way down. So remember, you can always alter and edit this according to your own means. Now, the sell rules, I won't go over these rules because they're the same exact thing. They're just turned upside down. But let's look at this example. Remember, this is being recorded. You can always copy this down. But let's say you don't like this. It's falling out of bed. It's making new lows. Fundamentally, you can't stand the direction of the company. So you say, I've got to sell this, right? Now, had you sold it, most likely you would have lost money. But if you use the confirmation method, you're only going to sell if it trades 1 or 2 ticks below this bar that you decided to go short. So let's see what happened on the next bar. It didn't go down. So if you had sold it right here, well, you have a 1-day loss, not very much. But if you're using the confirmation method, now you move this entry point up a little bit to right here. And we continue to track if we want to. And as we can see, had we sold off the original bar, well, right now we have a pretty bad loss. And we say to ourselves, boy, I was really wrong to get in this. Maybe I should think about getting out. Whereas if we use the confirmation, we know we haven't entered yet, and we just move our entry point up to the bottom of this. And we continue to track it as it proceeds. And now at this point, you've got a pretty large loss. You say to yourself, wow, what am I doing here? So you probably stop yourself out and take the loss. Whereas with the confirmation method, you simply move it up to here if you still think it's a good short. And you can continue this process as long as you want if you still think it's a valid setup. Remember, some of our methods only use it for 1 bar, and that's it. If you don't get filled on the next bar, we're out. Whereas in this example I'm sharing with you, you continue to apply it until you get filled, as we did right here. That's where you would have traded right below. So that's your sell confirmation. That's your entry point. And as you can see, it was the right thing to sell this. It's just that you got in at the wrong point. So you see how confirmation can really help you get a better entry point. Now, is this designed to have you buy at the bottom and sell at the very top? No. Sometimes you'll get an equal to or even worse entry point than your original idea. But that's okay. We want just to confirm it. Remember, it's about actually having a higher level of consistency. We don't want to sit through 3 or 4 days of it going in the wrong direction. We just want to get in, and the minute we get in, we want it to see go in our direction. Now, there's also an extra advantage to using the confirmation method, because the purpose of waiting for confirmation is not only to get us in at the beginning of a trend, but it's also to keep us out of bad trades as well. Let me show you what I mean here. Okay, let's say we broke down here, but you think this is a fake out breakdown. So you decide to buy, and you say, hey, listen, we're not going to break this support here. This was all phony. It's all, contrived by the big banks and the institutions and the brokers. I'm going to buy here. And let's say you just bought right there and you had a big loss. Okay. How could the confirmation method have helped us? Well, if we applied the confirmation method on the same bar we wanted to buy, now sure, we would have had to buy up here for confirmation, but look what would have happened. We would have applied it all the way down, and at this point, there was never any point of confirmation, so we never would have entered into the trade. So I always say in my other webinars, some of the best trades are the ones you don't take. So you see, this extra advantage of using the confirmation method is sometimes it will keep you out of bad situations as well. So let's look at an example right here in letter M. It's an older chart. Let's say you had a buy signal right here. Now, where did this close? First of all, it closed in the bottom to middle portion. So most likely, that's not a good signal. Had you bought, look what happened, okay? But let's use the confirmation method. Even though it didn't close there, let's say, okay, let's apply the confirmation because maybe it'll still work out, and it didn't. So we lower the confirmation. Now this did close in the top 25%, but it still didn't trade there. So now we just lower it again. And now we have another bar in the top 25%. So let's see. Yeah, we would have got filled on the very next bar, and look what happened, okay? See how simple this is. Most traders will buy right here, sit through a couple of days losses and say, that's it, I can't take any more of this, get out, and then a week later see your trade go in the direction you wanted, right? Or how about this? We close in the bottom 25% and we apply the confirmation method. So now we're using both of these secrets in conjunction with each other. And we entered right here. Now we have a nice one-day profit, or we could stay in and have a really nice profit. This is the simplicity of trading once you know how to listen to the market. You realize that when I was explaining these two techniques to you, did I talk about support and resistance at all? Did I talk about interest rates? Did I talk about what we're buying and selling in a chat room? No, because those are disservices to you as a student of mine. That's not going to help you become successful. What's going to help you is if I teach you things that have high levels of consistency. And by consistency, it means that this doesn't work 100% of the time. I'm not going to sit here and lie to you and say this always works. All you have to do is use this and you'll never fail. No, but you've increased your odds for consistency tremendously if you apply these two secrets. So these are really going to help you. It doesn't matter what strategy you trade. It doesn't have to be one of my strategies. It could be something you made up. It could be from another educator. It doesn't make any difference. But I strongly feel if you add these to your trading plan, you will increase your odds. Sometimes you only need to use one. Sometimes you don't need the bar to close in the top or bottom 25%, but you maybe want to use the confirmation method. Other times, you don't even need the confirmation method. You just want to see that the bar closes in the top 25 or bottom 25%. And then still other times, you want to use both in conjunction. Guess what? It's your decision. You can decide. Remember, we're not here to tell you how to trade. We're here to teach you all these things so that you can decide. As I said in the opening statements, the reason why most traders fail is because you take yourself out of the game. You let someone else decide for you. Make your own decisions and then learn how to be a consistent trader. All right, so let's look at some more examples on our platform. This is the PTS Primo charting platform that teaches you everything you need to know about entries, and everything is one click away. So let's look at some more entry examples, and these are more recent. For example, this is an NVAX, this is in Novavax. As you can see here, this was just a couple of weeks ago or a week or so in July. A buy signal was generated here. Now it closed in the top 25%, so that's a good sign. We still want to apply the confirmation method. and we were filled, okay? So we entered, and then look what happened. Basically, if you were someone with very high risk parameters, you most likely would have said, this is not working, I'm going to get out. But let's say you still like the stock, okay? So that trade didn't work out. So let's say you wait a little while longer, and what do we have? We have a bar that closed in the top 25%. In fact, I think it closed at the high. So you can get back in if you want, even though there's not a buy signal. Maybe this was a faulty entry. Get back in using the same parameters, confirmation method, and the top 25%. And guess what? You would have entered. Most likely you would have made back what you lost and then a little bit in one day. This is what we mean by consistency. Remember, it doesn't work 100% of the time, but most likely you'll be able to recoup your loss on the very next setup. How about this example in CRSR? Okay, this was coming into July. We got a sell signal. But look where the sell signal closed. Closed in the middle, all right? It did not close towards the bottom. So let's see what happened. Well, guess what? It didn't work. Why? Because the bar chart was telling us it didn't really want to go lower. So, all right, what if we applied confirmation method? Well, we would never have been filled, but if we still like this as a short, what do we have here? A bar that closes in the bottom 25%, and then we simply move our entry point up here with a confirmation. We would have entered on the very next bar, and now we have a successful trade. So once again, it was right to sell this. It was just that the entry point was faulty. Remember, when a bar closes in the top or bottom percent of its range, it's telling you it wants to go either higher or lower. But when it closes in the middle, it's really not giving you any clue. And as you can see, it didn't do anything. But when it closed in the bottom here, that was our sign to jump on board, and now we can sell. How about BABA? Okay, here's a perfect example, once again, of top bottom 25%. This was an actual buy signal. Where did we close? We closed in the middle. So is the market telling us anything? Not really. It's just saying that, well, I may want to go higher, but I'm kind of undecided right now. So why should we buy if the market doesn't know what it wants to do? And that would have been a wise choice, because look what happened. Now, on the very next bar, we did close in the top 25%. But does this give us license just to buy at the market? No, you still want to use the confirmation, and that would have kept you out of a really bad trade the next couple of days. So you see how these things can help you. Oftentimes, they'll keep you out of a bad trade. All right, let's look at this example in NTLA, Intella Therapeutics, okay? It looks like it's making a base, all right? The fundamentals look good. And after all, look at this. This is, in your opinion, major resistance. And look what we're doing. We're just barely closing above. Now, at this point, you say to yourself, well, you know what? The strategy that I trade doesn't really follow a lot of Steven Primo stuff. But guess what? This last bar just closed above the resistance, and we closed in the top 25%. So I'm going to buy, because that's one of his secrets, right? Top, bottom 25%. So I buy there. Unfortunately, you didn't apply the confirmation method. Had you applied the confirmation method, it would have kept you out. And even though you still think this is a buy, you would have waited until right there is where you would have bought. You would have saved yourself maybe 15, 20 points, and then you could have entered and taken advantage. So it was the right idea to buy. It was just that your entry was faulty. Let's look at a daily chart of the Canadian dollar. Now, these are actual signals. These are cluster signals of a certain strategy we have at Specialist Trading, and they're all generating sell signals for the Canadian dollar to go down. But as we always teach our students, remember, you want to apply these two secrets. The first one is right here in effect. You close in the bottom 25%, and we applied the confirmation method, and that kept us out of all this trouble. And even though there were cluster of sell signals, we never would have gotten short, and we would have missed this big move to the upside. It was just a faulty signal. Didn't work out. Sometimes they don't work out. Or how about this? Here's a 10-minute chart of the E-mini futures. Now, this was just last week. What do we have here? The bottom 25%. Now, if you wanted to, you could just use that secret alone, but we also want to apply the confirmation method because we just want to be sure. So we have two things working in our favor. Let's see what happened on the next 10-minute bar. Nothing. In fact, they all went up. So do you see how we would have saved ourselves the time and trouble selling this? And you would have said to yourself, well, I used Steve's top bottom 25% secret and it didn't work. Remember, we want you, especially in the beginning, to apply both just for added security. Had you done both, you never would have entered into this trade. Now, if you still think this is a good short, you simply wait for another bar that closes in the bottom 25%, or you wait till you're filled with a confirmation method. And what do we have here? Well, we entered right there using the confirmation method. And if you wanted to wait, you could have entered just below here in the bottom 25% and start using the confirmation method there. Either way, they were both great ways to enter into the trade because you would have taken advantage of that big sell-off. Remember, once again, I'm not talking about looking at any fundamental news. We're not looking at volume. We're not looking at overbought, oversold. We're not looking at institutions. We're not looking at what's going on fundamentally in the news. We're just listening to the market. It's a lot easier because it's really cut and dry. You know, you're either going to close in the bottom or top 25%. You're either going to use the confirmation method. That's it. There's nothing really else that's subjective at all in any of this. Okay, let's recap really quickly before I tell you about a great offer. Remember, the first secret is the top bottom 25% bar. Why? Because when a bar closes either in the top or bottom quarter of its range, it's telling you something. It's telling you it either wants to go higher or it's telling you it wants to go lower. Now, when you combine that with the confirmation method, that's getting a signal, but not just buying at the market or placing a limit, waiting for a buy signal to trade 1 or 2 ticks above the previous bar's high, or waiting for a bar to trade 1 or 2 ticks below the previous bar's low. That's your confirmation that you're going in that direction. When you combine both of these, you really increase your odds for consistency. So ask yourself, can these entry techniques help or improve your trading? I think if you ask yourself honestly, your answer is going to be yes. How would you like some more great techniques, some more edges about trading? Well, we have a great special Saturday discount for all of you taking the time out of your Saturday to attend today. We're going to offer you our Bootcamp course. This deals with trend trading. This tells you exactly how to determine the trend, and it's basically sharing with you how to be in sync with the trend with very basic, but things that most traders don't even know about. These are things I learned from the floor. We're going to talk about trend trading with entries, with exits, and also with stop placement. Trend trading aggressively and conservatively. You'll get complete course rules, but the boot camp is basically on how to be in sync with the trend. It's not a real trading method. So for that reason alone, we're including strategy number 1. This is one of our most consistent pullback methods. Now, a pullback method, if you're not familiar with that, is a method that does trade with a trend, but it looks to buy at lower levels within an uptrend, or it looks to sell short at higher levels within a downtrend. It does this by using a very proprietary Daunting channel setting. Let me show you what I mean here. Most people would look at this older chart of the spiders and say, we're in a downtrend. Okay, there's no way this can go back up. But strategy number 1 generated a pullback buy signal at the very lows of that sell-off, and you could have taken advantage of that 8-point gain, or since it's a ETF that represents the S&P 500, that really represented almost 700 points rise in the Dow in just about a week. So you're going to get the complete course rules. You're going to learn exactly how to trade this, where to enter, where to exit, where to place your stops, how to trade aggressively and conservatively. But we're also going to throw in some extra bonuses. In fact, we're going to throw in 12 trend trading bonuses. All right. You're going to get the boot camp. You're going to also get our strategy course rules, and you can see the prices of all these on the far right. You're going to get our exit course along with our entries course, our stop placement course, our buy sell line scanner. That's a scanner that tells you the overall trend. The top bottom 25% scanner. You can scan for stocks in the top bottom 25%. You can also get the scanner to find strategy setups. All right. A multi-scanner. So you can scan for different things at the same time. Also, one-click entries exit tool. This is on our platform. Strategy add-ons for TradeStation, Metastock, Sierra Charts, NinjaTrader. This means that if you want to use these on your platform, these entry signals for the strategies, you can. But bonus number 12, I think, is the most important. That is 6 months of our platform. Now, it usually runs for close to $900. That is going to be included absolutely free. So all of this I've shared with you today has been displayed coming from our platform. Let me share with you just some of the things you get. You're going to get literally dozens of things on the platform that no one has ever seen before, because they're only available on the PTS Primo charting platform, because there's things I've taken from the floor. You won't see these on most charting platform sites. For example, you're obviously going to get strategy number one, the buy and sell signals, but you'll also get 4 different overall trending features. All right, this is our buy sell line features. You'll get our proprietary exit levels. With one click, you'll see the exits on your chart. Auto-generated stop placement. With one click, you'll see different ways in which to place your stop. All right. You'll get scanners to scan for all these things. Strength of trend tool, the tool to let you know if the trend is running out of steam. And this all comes with great personalized tech support. This is just the tip of the iceberg of what you're going to be getting. But these are all great features that you won't find anywhere else. All right. So let's break this down. All right. You're going to get the Bootcamp course, which is all about trend trading. You're going to get an actual strategy with all the rules for entry and exits. That's strategy number one. And you're going to get this with the 12 bonuses, which include 6 months of the platform. This is worth its weight in gold. This is so much we're offering you. Okay. Now, normally this would cost over $8,400. I mean, that's how much information is jam-packed in here. We're not going to charge you $8,400. We're going to actually discount it down to $297, but that's for today only. I think Pro Trader Strategies is very lenient. And I say today only, but I think they could have this last maybe for the weekend, but that's about it. You're going to save over $8,100 in saving. This is a great way to become familiar with our teaching without spending a lot of money. I know you go to a lot of webinars and you see something that seems amazing. And then when you see the price, you say, I can't afford that. That's $5,000, $10,000. That's too much. Well, we really want to share with you our teaching. That's why we have such great discounts. Less than $300, you're going to learn all of this, okay? So this is a great way to become familiar with us, become a student of mine. And along with all this, you get educational correspondence, as you see right here in the bottom line. That means you get my personal email address. You can email me whenever you'd like with any questions. If something doesn't make sense, or you just want to make sure how to execute something, you can email me and I'll answer your questions, okay? I'm going to be answering emails as soon as we finish this presentation this morning. So here's how to take advantage of this. Contact Pro Trader Strategies. They are my sister site. They developed the platform with me and they're in charge of all the tech support, as well as the pricing and discounts. They're the ones that talk about price and about the platform. Now, if you want to email them, you can, but I would suggest if you're really certain about coming on board and being a student of mine, just call them directly. They have trading consultants manning the phones right now. You can call them directly at area code 310-598-6677. Now, that link you see at the very bottom is the link that will take you to the info page, as well as sign up page if you want to sign up online. But it's not a live link, but I've posted it in the chat box. I hope you can see it there. It's in the chat box and it should be there. It's a live link and just click that on and it'll take you right up to that sign up page. But I actually believe the best way to do it is just by calling Pro Trader Strategies. There's absolutely no obligation. They won't charge you anything. They won't try to sell you something. If you just have a question about pricing, or if you have a question about the platform, they would be more than happy to answer anything, okay? Now, I'm going to leave this information up here. If you have any questions concerning what I went over today, just go to your chat box. I think it's in the bar tool there. You just under chat, click that on and you can type in. And any questions you have, I will be more than happy to answer, okay? Let me just see here if I'm doing this correctly. Let's see if there are any questions. Okay, someone is asking, can this work on multiple markets? Yes, I know that I had the predominantly the examples and displays were with stocks, but remember towards the end, I showed you an example in currency pairs. I showed you a daily chart in the Canadian dollar, and I also showed you example with a 10-minute chart in the E-mini futures. So someone's saying, can you try this with Bitcoin? Yes, you can. It's really not about the market. It's not really so much what market you're trading. It's just about the bars. All bars are going to look the same with whatever market you're trading. That's why in that example, we specifically left out the title of the bar. We specifically left out the time frame because we wanted you to understand that it makes no difference. It's all generic. All that matters is that where you're closing, either in the top or bottom 25%. So yes, it's just, it doesn't matter, okay? If you wanna trade it with Bitcoin, that's fine. We have students that use this with commodities, where you're trading soybeans or a crude oil or coffee. It makes absolutely no difference because a bar chart is a bar chart. And it's basically just the market telling you what it wants to do. Okay, good question though. Any other question? Someone's saying, so if I signed up, I could send you an email today? Sure. As long as you signed up, you can send me an email as quickly as you like. And I will answer it as soon as possible, okay? Another question, for confirmation method, do you find that many students wait for more than 1 or 2 ticks to trade higher or lower before entering into the trade? This is a good question. When we say the confirmation method, remember, let's say that your strategy, whatever it's based on, generates a buy signal, okay? It could be based on the earnings. It really makes no difference. Let's say it generates a buy signal and you want to use the confirmation method, all right? So you're not going to buy, say you come home from work and you say, hey, that's a buy signal. That's good news on XYZ, so I'm going to buy it. You're not going to buy it the next day at the opening price. What you want to do is buy it if it trades above that bar on the next day, okay? If it trades the next day above. Now, everyone says, well, how far above? Should it be 1 tick above? Should it be 2 ticks above? Well, ultimately, that's your choice. Now, most students in the beginning, when we say this, they'll say, well, I'll just do it 1 tick above, okay? And some students like to stay with that. So in other words, if the high of the bar is 50, if it trades at 50.01, that's 1 tick above, that's 1 penny above. So once it traded there, you would either buy at the market, maybe you could have a stop order in there or just place a limit at 50.01, whatever you wanted to do. Or other students may say, well, you know, Steve, I've tried that with the markets I like to trade. I like to trade currency pairs and I wait for 1 pip above, and oftentimes I get whipsaw. So it all depends on your parameters, your risk parameters, how you like to trade. Many times you'll get in and you'll have to wait a couple of days before it goes back up. And so a lot of the students say, for that purpose only, I'll only buy up maybe 10 ticks or 10 cents. Is there anything wrong with that? No, as long as it fits your parameters. So to make a long story short, the answer is your personal discretion. All right? I personally like to do it 1 tick above. I have no problem buying 1 tick above, and I'll do that. I was actually paper trading a method the other day where it took more than 1 tick because there was the particular market I was testing this on, there was a lot of whipsaw. So I said, you know what, I'm going to buy it a little bit higher, maybe 5 ticks above. But that's just my own discretion. So once again, it all comes down to your own decision. This is why we say you have to paper trade first, because this is the only way you're going to find out. In other words, imagine you're learning how to ride a canoe or go down a whitewater raft, okay? Now, you don't want to learn how to maneuver that raft the minute you get into the rapids and say, okay, well, I've never done this before. I guess I better figure out how to go down or else I'm going to go over this waterfall. You have to practice that before, because that can happen at any time. So in any endeavor, in any hobby, in every career, there's always a rehearsal portion. There's always a practice session. Any athlete doesn't just jump into the game. He practices for weeks or months before. And then even before the game, they practice. It's the same way with trading. You're not going to say, well, you know, I'll figure this out on my first trade. No, we want you. In fact, we require all of our students paper trade first. That way they can decide, well, do I want to get in 1 tick or maybe 5 ticks? That way you can feel comfortable with your decision. So this is the way you come to that decision on your own. But great questions. All right. Any more before we sign off? Remember, this is a great offer. This is an amazing offer. Most likely next week, it's going to go back up to $8,400. So if you're really interested and you really want to take advantage of this, contact Pro Trader Strategies, email them, or I would suggest calling them at 310-598-6677. They would be happy to take your order over the phone for $297 or answer any question with absolutely no obligation. Now, remember, next week, we're going to go into part 2 of the presentation. We're going to be talking about more advanced entry points, but it'll be most likely a completely different promo, completely different thing. So it may be a higher price. So if you're interested in what we share with you today, contact Pro Trader Strategies and they can set you up, okay? As we take one last look at our disclaimer, thank you so much for attending today. Thank you so much for being a part of this class. I really hope you learned something. And remember, you have a full weekend to go and research and see if this works for you. You can go through your last couple of trades. You can just look at charts and you can say, hey, this stuff really would have helped me. Or maybe you might say, well, for my type of trading, it really doesn't apply. Either way, you've learned something for free. There was no cost involved. And that just shows you our sincerity and our intention to detail are really trying to educate you as educators, okay? Thanks so much for taking time out of your Saturday. Have a great weekend. Hope to see you next week and have a great trading week. Bye-bye.